Hi, everyone. Thanks for joining. Let's go ahead and begin. My name is Allison Rendelman, and I'm team lead of the Customer Success Associates here at YCharts. Hosting our webinar today is Caleb Eplet, VP of the product here at YCharts as well. Today, Caleb is joined by Dasarte Yarnway, the founder and financial advisor at Bucknell Financial Group, and Rita Cheng, the CEO and financial planner at Blue Ocean Global Wealth. Today, in celebration of World Financial Planning Day, we'll discuss the stories behind Rita's and Dasarte's respective firms, current challenges faced by today's planners, and how an unprecedented year has changed their approach when it comes to serving their clients. We will host a small Q&A session at the end, and if you're following with us live, hop on over to our Twitter page where we'll have a Q&A going with Rita and Dasarte. That's at YCharts on Twitter. Do note that the content of this webinar is meant for educational purposes only and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. Finally, we'll post a recording of this webinar to the support topics page of YCharts, and a copy will be sent to all attendees. Now I'm going to go and hand it over to Caleb to kick things off.
Yeah, thank you, Allison, and Dasarte and Rita. Thank you so much. Can't tell you enough, how much we appreciate you joining us today. I know everybody tuning in is excited to, learn a little bit more about both of you and how you got started with your firms and your approach to financial planning. So I couldn't think of a better way to celebrate World Financial Planning Day than with the two of you kind of sharing your thoughts with our audience here. So thanks. So as we get started, I'd love to kind of kick things off by just giving each of you an opportunity to share a little bit more of your story and tell us about your firm. So Allison, if you want to jump into the first slide, and Rita, if you can start for us and tell us more about Blue Ocean and how you got started there and your approach.
Sure. Well, I think I was always destined to be a planner, and thank you so much for having us both here to celebrate World Financial Planning Day. I didn't necessarily know about the discipline of personal finance. I studied corporate finance in college, but what I wanted to do is take those concepts. So strong balance sheet, well, that's a personal net worth statement. Statement of cash flows, that's the B word, or budget. And so I wanted to be able to help individuals and families transform lives and change the conversation of what wealth meant and what wealth means to our society. Before I kick it over to Dasarte, my dad was a refugee, and my dad came to America in the 60s with $17. And I always say, it does not matter which inflation factor you use. That was not a lot of money. But my dad taught me one thing. He said, you do not measure your self-worth by your net worth. You invest in yourself and you invest in education. So Blue Ocean strategy, financial planning is the foundation of every relationship.
That's great, Rita. And I think something that you shared with me in the past too is not only is it the center of the relationship and the center of that circle there, but you actually choose not to do business with anybody that is not going to engage in a planning relationship. Is that accurate?
That's accurate. So I became a planner. My timing might not have been the best on June 2nd, 99. And what I can say is none of my clients lost money because I didn't have any assets under management. We think about that time, and I guess that was my Blue Ocean strategy. At the time, everyone would give people advice if you turned over your portfolio. Well, I said, I really don't want your portfolio. I want to start with planning. And I believe that everybody, no matter their age, gender, race, ethnicity, relationship status, deserves objective, ethical financial advice.
I think that's great. And speaking of financial planning, Dasarte, I know that's a big part of Bucknell, but can you give us some more, background on you and your firm as well?
Absolutely. Thanks for having me, Caleb, and thanks to the YChart family for inviting both Rita and I on this webinar. We're really excited, and I'm excited to just be alongside Rita. In terms of Bucknell Financial Group, I started Bucknell Financial Group at the age of 24 in 2015 in Washington, D.C. And as I think and reflect about Bucknell Financial Group in its early days, I think about my mom, who was also an immigrant. My mom and dad are from a West African country in Liberia, which is the size of Rhode Island. right? My mom was born on a rubber plantation called the Firestone Plantation. It's the place where, you know, they mine rubber and they make tires for us to drive through traffic and on our commutes, right? And they made it all the way to America, bought a house, raised 6 kids in a house, and also found the way to bring 49 refugees from a civil war into our home. So I like to tell people that I have a bunch of brothers and sisters of no biological connection, right? So with saying that, as I matriculated through the financial services industry, I worked at the largest independent investment firm. I worked at a reputable brokerage. I worked at a bank right on Wall Street. And at all these places, there were minimums being enforced for the clients that we could serve. So I couldn't take on my mom, couldn't take on my auntie. I couldn't take on friends and family who just weren't super high net worth. So after seeing all of this, I thought that I had to make the firm in which I would have the most impact. And that's how Berknell Financial Group was born. This is a place where we believe in something called the right planning process. As illustrated on this slide here, we think that some key components, or the 5 or so key components for a financial plan, is retirement planning, investments, insurance, tax, and estate planning. And all of our clients, when they sign up to be a part of Berknell Financial Group, they get plans with that as the underlining kind of planning methodology. Onward to greatness is something that I preach often, and every morning when I wake up on Twitter, and this is just embodying, right, the journey that my mom had off of that rubber plantation, or Margarita's father had to get to the States with $16 in his pocket. Just saying that we're committed to greatness. We're committing to designing our wealth, which can embody the resources that we have in our investment accounts, and the things that we find to be valuable. So again, Caleb, I'm super excited to be on the webinar, and I look forward to the discussion.
Yeah, Dasarte, thanks. I like that. And I know a big pillar for you and your firm too, goes beyond just the planning all the way to the education piece. Can you touch on that a little bit and just talk about how you're, helping your clients not only engage in planning, but also get smarter around the topic of their financial well-being?
Absolutely. I strongly believe if you know better, you do better. And there are generations and a whole demographic of people here in the United States that just don't know better, right? Nobody taught them the rules to managing money. Nobody taught them how to balance a checkbook. Nobody told them the fundamental things that maybe other demographics might learn or might discuss at the dinner table. So it's our job here at Berknell Financial Group to give them this fundamental knowledge so that they can do better for themselves, their children, and the generations to come.
Yeah, I love that. And you said it's your job, but it's not. But it's great that you've made it your job. I think that's really important and shows your passion there. All right, Allison, if you could flip to the next slide there. So we've got some statistics up here that just really help show how important it is for people to have a financial plan. And when working with a financial advisor that put a plan in place, they're just so much better off in many areas. Now, these statistics are no surprise to either of you who've made your careers kind of focused on this topic. So I would love to, dig in a little bit here, and Dasarte, maybe you can start here by talking about, your approach to financial planning, kind of beyond just the right process, but what are you focusing on with your clients, and especially in this year, how is this part of your business really standing out?
I have a lot of clients actually, and I thought about this yesterday in preparation for this call, right? That are children of people that lived through the Great Depression, right? And their families are penny pinchers, right? Because they knew that at any moment a pandemic or something that was unexpected could happen, right? So as I approach financial planning, one of the things that we've been heavy on this year with our clients is their budget, right? We want to make sure that every line item is accounted for. Where can you save money? Where are you wasting money, right? How can we circulate money in a way that it always comes back to you and it's always working for your greater good? And I think that that's something that the pandemic has showed many demographics and many age groups, especially millennials who have never gone through a period like this, right? So I think investors need a financial plan because this allows them to commit to a roadmap, allows them the reassurance to know that these things have happened before, and they need the advisors to keep them accountable. So that's what we've been focused on.
Yeah, that's great. That budget piece is so important, and not always a fun one to talk about, but just super key. So, Rita, what about you? What are some areas that you've been focused on? And, I know, you're doing all types of planning, but what's been especially relevant for you this year?
Well, sure. I mean, definitely the B word, budget. Just like diets, they don't work, but it's a spending plan. It is how we choose to consume. So mindfulness is very, very important. And being a conscious consumer, you can choose how you spend and how you invest. This year, I've had a particular focus because I don't want to just talk about clients' portfolios. There's people behind these portfolios and they have a purpose and a passion. But I've used this time to talk to people about interest rates, insurance, and their estate plan. It is not about scaring people, but the pandemic, it's just like one of my friends said, my goodness, Margarita, if I can't get people to talk to me about estate planning during pandemic, what kind of advisor am I? I think creating a safe space where people can engage in these courageous conversations. Hey, mom, dad, granny, grandma, auntie, uncle, if something happens to you, what would you like to see happen? And when you frame it like that, sure, it's still a different conversation, but you make it about that person and they are more comfortable engaging. I would say the other thing that this pandemic has really shed light upon is, I've said this before and I'm gonna say it again, is I do think we need more empathy in wealth management as we're really sitting at the table or sitting in a Zoom meeting or whatever platform you're using and just leaning in and listening to people's, not just their dreams and their goals, but also their concerns and their fears.
I want to chime in there. I think that one of the things that Rita just highlighted for me was the fact that our job is to bring value to the clients that we serve, right? One of the first things that you learn when you're going through and getting your licenses, Series 7, 65 is KYC, know your customer, quote unquote, although I don't like that word, right? But knowing your clients allows you to be able to reach out to them and say, hey, I know you have a house, the interest rate is pretty high, as Rita stated, right? Why don't we consider doing something about that, right? I know that you just had a new kid or you had a life event happen, right? How about we square away your estate plan? And I think that's something that advisors have to remember, and the pandemic has been a really, really good reminder about.
Yeah, and I think that, and you both mentioned budget, and these are things that when you think about financial planning, these are very personalized items, right? These aren't something that can be kind of reused client after client, but things that you really have to dig in and work individually with each client on. So I'd love to hear a little bit more about how you kind of manage that time in your process to build these individual personalized plans for everybody. And then also, if either of you have any stories or anecdotes from this year where this process has been, especially helpful and kind of contributed to, a situation that anyone's been in this year in particular, would love to hear those as well.
Dasarte, you go when you talk about budgeting and so forth.
Oh, okay. Well, our process is pretty built in. So from the first conversation that we have with our clients, we're setting the expectation. Like, this is going to take 7 to 10 business days for us to analyze the data, right, and get it back to you. I think that that's a big key for us. Advisors usually don't like doing individual plans because of the time involved. But I think that in times like this, the plan is what they're going to come back to, right? It's going to be the plan that reassures your clients. It's going to be the moment in which you've shown them, right, the possibilities of what could happen by investing, what could happen by not having insurance or not having their estate plan, right? So you're going to lean on that plan in the darkest times. So I think that's why it's important, and it's why advisors should make time for it. I will say this, though. I think that if you don't, no plan works unless you work the plan. Right? So it's our job to help our clients implement that plan, which is something that I think advisors have to do as well. Rita, what are your thoughts?
Sure. So my dad was a mathematician and I could just hear him speak in my ear. We all know garbage in, garbage out, right? And I tell clients, listen, disappointment occurs when expectations don't meet outcome. And I would be lying if I told you this wasn't work. It's a lot of work for you, but it's a lot of work for me. The more I know, the more I can help you. My goal is not to micromanage you or tell you not to shop at Whole Foods or Trader Joe's, but my job is to understand what is important to you. And I contrast that with suitability, like what Dasarte was saying, know your customer. Well, for me, that's just not good enough. I'm very competitive. I want to understand my client. And I can think of no better way to understand my client than to do financial planning, because I get to know your assets, your liabilities, your income, your insurance, and expenses. And then when I explain it like that, like, yeah, that makes a lot of sense. And I said, whether you decide to work with me or someone else, for me to do the best job possible, I need to have a good input, because after all, this is your life, and it can't be garbage in, garbage out. And then they smile. I'm like, yeah, Rita, you're right. And I'm like, I don't need to be right. I want to do the right thing.
I like that. All right, so let's take it a little bit higher level, Allison. If you want to jump onto the next slide here. So Dasarte, we've got a chart here, and it's branded with your company here. So we'll let you talk through it. But what we're seeing, right, is if you started, I guess, the end of January with a $10,000 investment, whether that was in the stock market or in a 60-40 portfolio, you can see when this volatility really spiked, at the beginning of the year there in February. If you were to pull your money out during that volatility spike, you can see how much money you'd have had, after that short period of time in the market. But if you stayed invested, up until today or a day or two ago when we put this chart together, you'd actually have more money than you actually had back at the end of January. So, I think the point that you make often and what this chart kind of reinforces is just staying invested. But how are you educating your clients about volatility and when it's actually in these tumultuous times, keeping them invested?
I mean, education is a process, right? We're getting clients at all stages of the kind of education cycle, right? And investing like intellect. So we have beginners, we have novice, we have people that have been investing for 50 years. What I do think that is relevant to all of those people is the fact that you have to be patient. You have to be disciplined. I think the quote goes, and I regurgitate this to clients all the time, is that investors make more money by the seat of their pants than by the soles of their shoes. So for a lot of the millennials that we serve, this was their first time going through a steep pullback like the one that we had, right? And our advice was be patient, right? Time heals all things, and it will eventually heal this market correction as well. So I think that this is a beautiful chart. And the moral of the story is that stick to the plan, right? Stick to your contribution cycles, be patient, and your investments will mature to their proper figures.
Yeah, I like that. And, that parallels nicely into the next chart, Allison, if you flip forward again. Rita, here we've got a picture that speaks well to a quote that I think I saw on your blog. And it's similar to what, Dasarte just said about the seat of your pants versus the soles of your feet. But, I think yours was, it's not about how you time the market, but how much time you have in the market, right? Mm-hmm. So, talk to us a little bit about that message that you deliver to your clients and how this picture kind of helps reinforce that statement.
Absolutely. That is 100% correct. It's not about timing the market, but it's about the time that you are in the market. And so it's important for investors of all stages and all wealth levels to know that you build wealth over time. For younger investors, dollar cost averaging, diversification, and the time value of money are very powerful. But the biggest takeaway for all investors is that sometimes the hardest part about investing is staying invested. And just like what Dasarte was saying is patience. Sometimes the most tremendous value that we can provide to a client is just reaching out to them on a proactive basis and saying, I know what you're experiencing is stressful, or I can relate to what you're feeling. But the most important thing is, if you don't need this money in the short term, to allow yourself to stay invested so you can participate in the recovery.
Mm-hmm. And that communication part is so key, right? Allison, if you flip forward one more slide here, this communication process and the whole concept is something that we talk to our clients a lot about at YCharts, and we've kind of developed along with Michael Kitsi, so you can see on here where we pulled this graphic from, this framework for communication. Looking at the top, we have this concept of broadcast communication, right? So communication that you as an advisor deliver to your entire network or your entire client base, you're broadcasting that out to a large group of people. And the two cadences, I guess, in which this can happen is one kind of that scheduled, whether it's a newsletter, a blog post, a podcast, things that you both get involved in very often, but those are on a very routine kind of schedule when people know to expect that. But the other is that ad hoc communication, right? Something that could be because of a recent market event or getting out there in front of some news that your clients are going to see and certainly want to understand how that affects their portfolio or their financial plan. And then on the bottom, the idea of this narrowcast or just one-on-one communication, that you have directly with your clients. It's very personalized, but again, then scheduled and then, sometimes ad hoc, reactionary. So, maybe Rita, you can start and talk about, how you have an approach to communicate with your clients and, which of these categories you may spend more time in or less time in and how that changes as different market conditions change.
Sure. Well, the most important thing and why I believe Dasarte and I are here today with our friends at YCharts is to talk about the importance of client communication. So, in fact, we use all four. So we have our newsletter that goes out, then we have, blog or other content. But sometimes there's specific issues that are relevant for segments within your client base. So interest rates, that might be narrowcast scheduled. But I also think that sometimes it's good to be ad hoc or a little bit spontaneous. And I'll give you an example. So my client in August had to have knee replacement surgery. She's not sick, but she had to have surgery. And what I did is I stayed in touch with her, but I found out when she would be home. And then what I did is I had urban stems delivered to her. I didn't want to have food because, there might be dietary restrictions, but I had seasonable, sustainable flowers delivered to her with a message. I wanted to send some sunshine your way. I hope these brighten your day. Can I tell you, I saved the voicemail message that she left me because that was an example of narrowcast ad hoc. I knew there was a life event and I wanted to do something special for her.
Yeah, I mean, it sounds like that message, a somewhat small gesture in the grand scheme of things, but it just goes so far to make that connection with your clients and reinforce how much you care about those relationships. But Dasarte, what about you? I know you have a lot of ways that you get out there in front of your clients. I know your podcast is something that's really popular, and even the town hall calls that you do. But I'd love to hear a little bit more about your communication strategy and how you go about putting that together.
Yeah, I mean, when I first started Berknell Financial Group, I wanted to meet clients where they were. So I wrote a book to have the readers read, and I had a blog, right? I did a podcast to have people who would rather listen to the information, and we've just kind of got into video as well. So for those who want to see and interact with me or with somebody that I work with, right, for them to react. Now, broadcast, narrowcast, I think these are great. I think advisors have the biggest opportunity right now to establish their voice, to amplify their voice to a defined target audience. The broadcast, the industry's been doing that for some time, right? Whether you're at the wirehouses and you're sending out compliance approved messages, or whether you have a small shop and you're writing personalized blogs with your voice embedded in it, right? I think for me, the way that we make advice personal, advice human, is to do the ad hoc stuff, right? It's to speak directly to your client. It's to touch on those pain points and their personal needs that allow them to see that you really have their best interests at heart, that you're really a fiduciary by the definition, right? And you're really here to serve and to be a servant leader. I think that's what makes the difference in a client advisor relationship. And here at Berknell Financial Group, we've been doing that, right? In the height of the pandemic, I wrote personalized notes to the clients that I know just couldn't withstand this volatility, right? It's not avoidable, but we all had to go through it. So I wrote personalized notes to them. I called them. I had long conversations with millennials who were trading on Robinhood and doing different things that they probably should have been doing, but their money was at risk, right? So I think that we have to have a combination of both, but the ad hoc type narrowcast is what is going to make the difference between a great advisor and a good one.
Yeah, I like that. I mean, I think you both touched on the same thing, right? If I'm summarizing this correctly, that broadcast scheduled messaging, that messaging they put out to your network, you kind of have to do that, and that's kind of expected to keep your business going. That narrowcast scheduled, like those meetings have to happen, right? That's when you're going to get together, reinforce the financial plan, go through quarterly statements. But maybe the biggest difference maker you have with your clients is that narrowcast ad hoc, chance to just reach out when people don't expect it, reinforce a relationship, and really kind of, make that difference that kind of makes your business unique. Is that pretty accurate?
I think so. And I would even say that the broadcast is for your client that you have not met yet, right? So there's going to be people that are watching you from the sidelines. Will he be here in a year from now? How will the market do? I don't know if I have enough money, right? And they're going to tune into those broadcasts. But the narrowcasts are for the folks that you know, that you've taken the time to understand, as Rita would say, right? I understand you've input the data for me to get to know you better from a financial sense. Now you can speak directly to their situation. And I think that, again, both have a place in a firm's practice.
One of the things I wanted to add in here is for all the advisors listening is you can choose what you think works best for you. So I graduated from college with a degree in finance and East Asian language and literature. My first job was to read summaries and write investment summaries and write concise, compliant reports. Sounds like I'm talking out of both sides of my mouth, right? But I knew how to write in a way that was clean and concise. I felt that sometimes I didn't necessarily feel comfortable being personal because I thought, well, people don't want to know that. But well, finance is personal, so I would share stories, never violating confidentiality, but we talk about needs versus wants. I'd share stories about my 3 kids. One wants a cell phone, the other one needs a cell phone. I'd share stories about caregiving. Well, no one can get in trouble with me because this is my view of the world. And that really resonated with people. They would say, hey, Rita, I really liked what you said about X. And people get to know you as a person and they get to know what you stand for. And they are watching you. I like what Dasarte said, they are watching. They're like, how does she handle X? What does she feel about Y?
Yeah, I think that's great. We could probably spend the whole hour talking about the communication process here, but Allison, if you can jump onto the next slide. Again, just kind of reinforcing, this concept of financial planning, right? Here at YCharts, we talk about the investment management part all the time. And I know we've spent a little bit of time on the here today already discussing, budgeting to a little bit of a degree and interest rates to a certain extent. But, starting with you, Dasarte, there's been so many kind of unique things about 2020. I'm curious if there are any specific parts of financial plans that you've been tweaking or kind of revisiting, or even just looking to really focus on with your clients, this year in particular?
Yeah, first and foremost, I love this slide, right? Because you're bringing out the old athlete in me. Defense planning, offense planning, aggressive planning, progressive planning. I think that's great. In terms of what we've been focused on this year is a few things, and I took the time to think about this yesterday. Number one is the changes with the tax deadline. As you know, the tax deadline was pushed back, so that gave clients an opportunity to do things like contribute to their IRAs later, right? Which is helpful. The business tax deadline has, I think, been moved, don't quote me, from October 15th to November 1st. So just making sure that our clients' taxes were in order. One thing that also went through was PPP, right? So for some of the business owners that took the PPP loan, making sure that they paid a specific percentage of that towards their payroll, right? And being able to account for those expenses, whether that was through a provider like Gusto or whoever they were using to keep their books. For the business owners that we serve, it was a rough year, and I'm sure some of the advisors can resonate. And then lastly has been the conversation surrounding estate planning. There's a huge demographic of millennials that are coming into age, right? And by that, I mean that they're starting families. They're buying their first home with interest rates going down. They're doing things that are kind of at the height of their accumulation stage, right? Right before they kind of go through that 15-year period before they get to like serious retirement planning. So we've been really trying to make sure that they start with the mindset of everything that I accumulate, I'm going to make sure that I protect. So from that estate planning conversation, we're setting up wills, trust, right? Advanced medical directives, making sure that their deed is in the trust, and making sure that they have sufficient life insurance through some of our suitable recommendations. So I think that's been a huge focus of us, and I think that it's been a unique year for advisors to really show their value.
Yeah, I couldn't agree more. And especially, how quickly you were able to take some of these very new topics, right? Like the extended tax deadline, the PPE loans, become an expert on that, and, take that stance and educating your clients and make sure they're doing the right thing. I think, tons of value there. That's awesome to see. And Rita, what about you? I know, one thing that I've heard you talk about a lot is long-term care planning. And I'm sure that's been, especially top of mind this year, but would love to hear about that and other things that you've been discussing with your clients.
Sure. Well, there's no shortage of news. What I think advisors like Dasarte and myself do a good job is taking that news and making it relevant and actionable. So student loan deferment, there was some confusion. Some people had been paying for 8 years but experienced job loss. I don't want to blow it and no longer be eligible for student loan forgiveness programs. So helping them understand that. Paycheck protection, tax filing deadlines, mortgage deferment payment, if that makes sense. But I think the big one, and this is a topic that is so near and dear to my heart, is, long-term care planning. Just because we plan for an event or prepare for an event does not mean it's not going to happen. And if we do, we're certainly not jinxing ourselves. But this is what I tell people. It is so important that we give people choice. Choice can be overwhelming. It beats the alternative, though, not having choice. So choice, independence, and control. And that resonates with a lot of people. I mean, even when I was having the conversation with my family, my mom said to me, she's like, isn't that for old people? I said, Mommy, of course you're young and beautiful, but the reason why we want you to plan now is I don't want to decide for you. I want you to have choice and be in control. She's like, yeah, I like to be in control. So the words and the language we used, we have to be really careful because this is about conversation engagement. That's we're facilitating conversations, demonstrating our value as opposed to having clients freeze and shut down.
I want to add something to that. You mentioned news, a lot of news being out, right? This is an election year. This is a year when we've seen a super rough pandemic and it's affected everybody in the world and in our country. I think one value add that we've been focusing on for our clients is to make sure that we're separating the news from the noise. These are the things that you should be concerned about, right? And these are the things that are scaring the market and will cause volatility, but you should focus on your plan. You should be focused on defensive planning, offensive planning, aggressive planning, and progressive planning as the slide suggests, right? And I think it's our job to really separate the news from the noise. So I appreciate Rita signaling that alarm in my head.
Yeah, it has been a year of a lot of interesting things, right? And mostly things that we think of as negative. But, Allison, if you flip to the next slide, I like to think that there are some positive trends that have emerged just from the conversations that we've been having and things we've been thinking about this year. One thing that is, pretty small, but I know we've seen a lot of adoption with is just moving to having Zoom meetings, right? And that becoming a new way for advisors to connect with their clients more frequently or, in a more accessible way that keeps everybody safe. But I'm curious, from both of you, what are some things that we're seeing from 2020 that you think are going to be new trends that stick around, especially in the financial planning space? And Dasarte, maybe you can take this one first.
For sure. There's a couple of things that I think that we'll see this year and going on forward. One of those things is the increase of diversity and inclusion in the financial services industry. I think that in I want to say January, I was speaking at a conference in Florida, and we were speaking on diversity and inclusion. And one of the things that I mentioned is that no longer is this just a conversation between minorities, right? This conversation has traveled up the ladder into the boardrooms between executives and has been an industry-wide subject. So we need more women in the industry. We need more minority women in the industry. We need more African Americans. We need more Hispanics, more Latinos. We need more people of color in the industry. And I think that that's going to change. It's inevitable. And if we do have this, the number of people and the demographic of people that will be able to be served will inevitably be a wider and longer net. So I think that that's going to be a growing trend. The second trend, I think, is going to be there's going to be a lot more independent advisors. Advisors are beginning to see that their voice is muted when they're at certain firms, right? And we're in a day and age where people want human advice. So how can I trust a canned blog post, right? Or just stats or numbers on a page? What they want to see is somebody that they trust and can count on to bring their best financial self to life. So I think there's going to be a lot more talented independent advisors hitting the market within the next 3 to 5 years. And I also think that technology is also going to play a huge role in our practices, right? So as you've seen, Zoom has been integrated, but the way that we get our clients' attention, analytics are going to be taken serious by independent and small advisors to make sure that they're capturing the attention of their demographics, and that's going to be a huge part as well.
Yeah, I like those. Something that stuck with me that you said early on was just the fact that there were certain people that you wanted to work with your practice that you couldn't when you were under certain umbrellas, and just another big reason I think that the move independent is something that will continue to see traction, and it can be really great for people in
sure.
the state. What about you, Rita? What are some trends that you think are here to stay?
Sure. Well, I definitely echo what Dasarte was saying about diversity and inclusion. And to expand upon that, in the past, we heard a lot about financial literacy. I think that financial literacy is very important, but to take financial literacy to the next level, I like to say financial inclusion, because there is a lot of racial inequity in our country. And yes, financial literacy is important, but it is really also about financial inclusion, including underrepresented, underserved communities so that they can build wealth too. I really thought about this. So an example would be, I understand my dad came here in the 60s, but some of the things and the biases that my dad brought to America, they still exist. People liked real estate and they liked gold. Well, there's many asset classes in between. The other thing that I think is also important is understanding what is long-term planning for one community, maybe short-term planning for another, and vice versa. But for sure, the expansion of diversity, equity, and inclusion and financial inclusion, which also brings me, because this is why Charts Investing, is increased interest in ESG. E is easy for people to understand, but I think people, investors are demanding more transparency and accountability in the S and G space. You know, how are you, okay, you're recruiting people. What about retention, compensation, board diversity? So I think ESG will only increase.
Yeah, I know we've been seeing a ton of demand in that space, and it sounds like you have too. And I'm sure the conversations that you're having with clients in that are absolutely going to pick up and become even more frequent in the future. I think we'll maybe dig into that a little bit more though. I'm curious, like, how are you handling questions like that from your clients? Are they proactively bringing up the whole concept of ESG? Is that something that you bring up and educate them on, and then get some feedback there? Just talk me through that a little bit, Rita.
Sure. Well, I mean, I think some clients are very clear about what they want. Other clients, it's not that they lack clarity, but they have been misinformed. I don't necessarily push ESG, but I lean in and listen. And the reason why I do that is because what could be socially responsible for one client may be considered socially irresponsible for another. So just finding out what it is that they're most interested in. I'll give you an example. I have a client that she worked here in DC at a trade association, and she was very disturbed about how drug companies treat patients with certain schizophrenic and other disorders. And at the age of 78, she told me, she's like, listen, I know I'm old, but I can be a long-term investor, and I would prefer to avoid pharma in my portfolio. So that's just an example. I didn't impose my views. I said, in developing your asset allocation or your investment strategy, are there any special considerations? That's just an open-ended question. Or, I mean, I know I said, are there any? And then if they say yes, then you say, hey, share that with me, or let's talk about that. What would you like to see happen? And I find that that's just a great way. Also, the environment, with everything that's happening with floods, forest fires, people are recognizing that they can have an impact.
Yeah, I like that. I think that's great advice. It's good to hear how those conversations are going, and I like how you're facilitating that conversation without starting with a concept that somebody might not be familiar with, which is very investment focused on certain securities and things of that nature. But I think that's a good way to get into that. Allison, if you can flip to the next slide, I think this is probably the section I'm most excited about, and I think where everybody's going to really kind of turn up their volume to pick up on some tips here. But Dasarte, maybe you can run through your list first, but really interested in, you've both taken this step, started your own firms, been extremely successful. I know a lot of people look up to you for how you and are looking for, maybe some tips that you can share on how they can do the same. So what advice would you give Dasarte?
For the advisor that plans on launching their own firm, I think there's a few different phases in starting your firm, right? It's the leap phase. Maybe you are working at a firm and you're selling products, or maybe you're at a wirehouse, or maybe you're at a bank, and you want to take the leap into doing independent advice. And then there's the launch stage. This is your first 3 to 5 years, trying to get your footing, right? Try, fail again. And there's a growth stage. I want to scale. I want to hire my first employee or first few employees, right? It's a bigger operation and it stretches beyond me. What you have to do is have many conversations with advisors that are already in the seat, right? You can skip a lot of heartache, right? You can make sound decisions. You can get all of the technology advice that you need to run your business by talking to people that are currently experiencing it, right? Taking live bullets on the field and learning from their experiences. So that's the first thing that you need to do. Have many conversations with advisors in the seat. Number two is picture yourself in the seat. No one practice looks the same. I think that it's important to picture what you want your lifestyle to look like. Where do you want to wake up? Do you want to commute to work? How does this affect your family? What do you see for yourself in a calendar year? All of these things need to go through your head so you can begin to design the perfect firm for you. How do you charge your clients? Who are you working with? What type of conversations are you having? I think Rita's last comments about ESG was wonderful, because I would agree that you love having those type of conversations with your clients, right? So you have to picture all of those things if you can in the early stages of your firm. And then lastly is measure twice and cut once. Take your time. Take your time with this, right? This is going to be one of the biggest decisions that you make that is going to affect not only your clients but your family. Make sure that you're doing it as right as you can before you take the leap, and then go ahead and take the leap. Cut one time and watch the world unfold for you. So those are my 3 tips for advisors that are seeking to start their own firm.
That's great. Measure twice and cut once. That was my grandpa's advice all the time. So I love seeing it come back in a new application here.
Nice.
Rita, what about you? What are some of your advice?
Sure. Well, I love everything that Dasarte said. I feel like we could have a whole hour on this. But I would say be very clear about who you want to serve and what you do. And I can quantify that further. So early on, remember, I graduated with a degree in finance. I read analyst reports, but I did not want to be transactional. So I'm very clear. I do planning. I love you with my heart and soul, but no, you can't just give me your portfolio to manage. Not because I don't love you. I just don't think I can do a good job, and I wouldn't be doing you a disservice. So, I mean, I'm very flexible and sweet, but that's something that I just will not back down on. Which leads me to don't let people define success for you. You ultimately have to decide what you define as success. And that may evolve as you evolve and your practices evolves. Be prepared for unsteady income. So make sure you have cash reserves. It's not about being negative, but remember, it's about being prepared. And as your business starts to expand, make sure that you are investing in your business and setting aside money and making sure that you are saving for retirement and planning. But this is the one that is my absolute favorite. Have conviction and confidence. So with me, remember, what works for me may not work for you. I believe in financial planning more than you can imagine. My one nickname is DQ for Diversity Queen. The other one is FBG, Financial Planning Goddess, right? I don't call myself a goddess, but that's a nickname my friends bestowed upon me. I have such conviction that financial planning transforms lives. And I'm so confident I'm going to do right by people, and I do right by people. That's what I stand by. So your clients want you to have conviction. Dasarte, tell me, why do we need to do estate planning? I heard insurance is bad. Why are you telling me I need to buy insurance? And, I look to Dasarte for leadership, and our clients look to me for leadership that, what, I know you don't like insurance, but here's why. If something, I know you don't have insurance in your country. It does not mean your country is bad. So I'll give you an example of what I mean. In my husband's country, in Indonesia, people don't really buy insurance. If you die, your relatives take care of your kids. My husband is right. In Indonesia, he does not need insurance. He's right. But in America, he does need insurance. So I have to tell him what works there may not work here. And I have conviction. And by the way, he does have insurance. So that's what I mean about having conviction and confidence.
Those are great. And I agree, we could spend hours on these tips, and I certainly appreciate the advice. Everybody does, but I did want to leave some time here for a little bit of a Q&A session to make sure that we can field some of the questions that have been coming in throughout the webinar here. And also, if I'm not mistaken, Dasarte and Rita, you've both mentioned that you're gonna be fielding questions on Twitter too, right? So if anybody does have a question that they want to ask kind of outside of this forum, feel free to tweet at either one of you. And I think we might even have a Twitter handle prepared, which Allison can touch on. But that way we can make sure that we get as much Q&A as possible. But I'll turn it over to Allison to go through any questions that have come in for us.
Yeah, well, thank you so much, Caleb, for hosting this webinar, and Rita and Dasarte for sharing your perspectives and experiences. I will jump into a short Q&A and ask a few questions. And again, those of you following us live, you can tweet us at YCharts, and we'll be answering those questions and feeding those along to Dasarte and Rita as well. So let's go ahead and begin. The first question I have is, as you are both avid bloggers and content creators, how do you come up with the topics that you want to write about?
Dasarte, you can go first.
Oh, that's a great question. For me, lots of it has to do with the news, not the noise, right? What's going on in the world and why my clients should know. And then the second thing is just people are asking me questions. I'm interacting with prospective clients. I'm interacting with my clients. And if one of them has a question about a certain financial topic, I assume that there might be 10 or 20 other people with the same question. So I want to be able to curate this content to make sure that I'm answering these questions. That's the first level of value that you can provide at the top of the client acquisition funnel for someone, right? To say like, hey, I have the answer for your question here. Go ahead and read it on my website, or go ahead and listen to it on the podcast. We explain it in detail right there. So I think those are the two ways, just looking at the news and what's going on, whether that's financial or not. We had a period during quarantine where there was a murder of George Floyd, right, that I wrote about. And then we had a period about lowering interest rates, right? So just giving my clients a spectrum of my opinions and thoughts and answering their questions along the way.
Rita, can you add anything on some of the, your ideas for content creation?
Sure. I mean, I would say, I'll give you an example. Sometimes people do ask questions, just like what Dasarte was saying. So I think in a span of 2 days, 5 people asked me a question about home equity loan versus line of credit. And I didn't violate confidentiality. I wrote a blog about it. And you know what? I actually, it's not just for me. I wasn't selling anything. I actually do a lot of work, volunteer with the CFP board, and I let them use my blog as well, because we can help share valuable financial insight and advice. The other thing is, I think sometimes it just comes to me too, when like I'm like working out. I'm like, oh my gosh, and I love music, and I'm like, oh wow. So for example, this is a little bit old school, Whitney Houston, the greatest love of all. I'll teach our children. I'm like, you know what? It's Financial Literacy Month. I love Whitney. A shout out to Whitney. I'm going to write something about this. Or I do love music. Meet Me Halfway, Black Eyed Peas. I'm like, a lot of couples bicker about money. Now, I'm not saying to my clients, but I kind of use this as inspiration to make it a little bit, don't get me wrong, personal finance is very serious. It's very serious. But if we can bring a little bit of wholesome humor to improve engagement, why not?
Mm-hmm.
Awesome. I think those are both great answers. Another question I have is, if I'm an advisor and I want to start integrating planning into my practice, how can I get that started? What are some resources I should look into?
Rita, take this one.
Okay, sure. So the first thing I would do is I would do what Dasarte says, talk to people who are doing planning, right? And then I'd find out what tools they're using. And then what I would do is I would reach out if you are a member of XY Planning Network or FPA or NAPFA, and I would ask any of those vendors if there's discounts, if there's free trials, and I'd see, I test them out. People always ask me, what's the best tool? And I will tell you, the best tool is the one that you're going to use. I know it sounds silly, but it's the best tool is the one that you're going to actually use. Mm-hmm. So, and if anyone has questions, they can also message me. I'm happy to give them guidance.
I'll add one thing. I think those are great suggestions. And in fact, I did all those things, right? I think the one thing that you can add on that is just making it human. So for me, I love to write. So I'll write my clients an executive summary of about 1 or 2 pages. And they have the tools, they have the automated generated thing, right? But then they have somebody explaining it on words. So they can come back and read exactly how they're going to implement it. It speaks, it's no jargon, right? In some cases, for our clients that don't want to read, I'll do like a podcast version and I'll send it to them like, hey, this is what you have to do. And they'll listen to it, right? So I think that there are ways to make financial planning fun. And if you can do that, that's just icing on the cake.
Great. I think we're running close on time, so I'll ask one more question for us. I was hoping we could dive a little further on the topic of ESG, or environmental, social, and governance funds. You can use ESGs, but are there other practices you utilize for clients who want to be more intentional with their investments?
Dasarte, you want to go?
I think you got this. You're the ESG queen.
Okay. So the first thing I would say is, so ESG, environmental social governance. So the field of impact investing, SRI, sustainable responsible impact investing, and ESG, many people use these terms interchangeably. And I never want to correct a client. I ask them what they mean. And there are, I think that ESG has become more accessible. There's mutual funds, there's separately managed accounts, but there's also ETFs. And there's the Sustainable Investment Form. There's a new designation through the College of Financial Planning. So what's interesting about this is clients are asking questions, and you don't necessarily need to know all the answers. You just need to know how to get your clients to engage in this topic of conversation. And then many of the asset managers, they have white papers, they have resources. Just make sure that you ask what materials are advisor approved and what are client approved. But you can start this, because what you don't want is to make assumptions and say, you know what, my clients aren't interested in that. Let them decide if they're not interested.
I would also add that there are turnkey asset management programs or platforms that an advisor can plug into to utilize their ESG portfolios. So there's the ETFs, as Rita mentioned. The first step to that is talking to your clients. We try to make sure that we're aligned with our clients and their lifestyles. And sometimes that warrants an ESG type portfolio, but there are services and platforms that allow you to plug in if you want to leverage ESG services.
Great advice. So, Allison, I'm just going to jump in. I know you're about to wrap things up, but I did just want to thank you both one more time, Dasarte, Rita. You know, super grateful to have you on today. I know I learned a lot. I'm imagining everybody that tuned in also did. So thank you both. I would encourage anybody that isn't already to follow both of you on the socials and subscribe to your blogs. There's always great content there. So if any of you have any last closing words, we would love to hear them. But if not, thank you so much for your time today.
Thank you.
All right.
Thank you. Happy World Financial Planning Day.
Yes.
Dasarte and Rita, thanks so much for joining us today. And Caleb, thanks for kind of hosting and leading us along. I do want to reiterate that a recording of this webinar will be sent to all attendees and posted on YCharts. In case you want to review anything we talked about today or to share with your colleagues, please keep in mind that you could ask any questions. Just add us on YCharts.com. That's going to be on Twitter, so just at YCharts, and we'll be forwarding those along to Dasarte and Rita, so you can get some live responses from them. We always appreciate any feedback you might have. Please reach out if you have any questions for webinars going forward. And thanks again to our guests, Dasarte and Rita, for joining us today on World Financial Planning Day. Thanks, everyone.